Welcome back to episode number 2 of the First Time Homebuyers podcast. I am one of your co-hosts, Tom Sommers, out of Minneapolis-St. Paul, with Coldwell Banker Burnett, and my co-host, Eric McKenna, out of the Pittsburgh area with Remax.
That's correct. How are you everybody doing?
I'm great. How are you today?
I'm doing well. Doing well. Looking forward to it. Looking
Good.
forward to getting the message out.
We're very excited about this. So thank you
Absolutely.
for all of you that tuned in on our first one where we introduced ourselves. So we're going to jump right into it today, and we are going to cover out-of-pocket expenses for buyers. This is one of those that is very confusing because I feel, at least from my perspective, there's a lot of real estate agents in my area that don't really tell everybody what's coming down the pipe. And I don't think it's a deceptive thing. They just don't sit down with them and say, hey, these are ones you can't get away from. So we want to answer that question for you today. So let's start with the first one, which is your down payment. So if you're doing an FHA, which is what most of the first-time homebuyers are doing, it's a government loan. It requires the least amount of money down, which is 3.5% of whatever the purchase price is. Okay, so you know that. Most people know they have some type of down payment. But then going beyond that, there are other costs. So let's talk about the appraisal. Okay, once you have everything put together and you've had an inspection, you're going to have an appraisal. Now, sometimes that appraisal gets rolled into the closing costs, and sometimes it is an out-of-pocket expense for the buyer. So it depends on who your loan officer is and what the loan is. You need the specifics. We're talking what, about $500?
About 500. It can be as high. I've seen them high as 600, 650,
Okay.
depending on the scope of the home.
Okay. Do you remember why one was more than the last?
The only thing I can remember, Tommy, the difference generally that I would see is the scope or the size of the home. If you get into a home of 2,500, 3,000 square feet, the appraisal being it takes longer is a little bit more money. Not a lot of money, but kind of a similar increase that you may see in an inspection, which we'll talk about as well.
Right. So one of the things that you have to be prepared for is when you purchase a house and you sign off with your loan officer that they can charge your credit card if that's the way you're paying for this appraisal. With an FHA loan, if there are any type of repairs that need to be done, you may have to have someone come out and the appraiser has to double check that the repairs are made before closing. So that could be an additional cost of about $150. So know that if you've agreed in your purchase agreement to pay that particular fee, it could come to your credit card again without getting any notification of it, which has happened to a client of mine here just a week or so ago. They signed the paperwork, they were aware it was coming, but no one gave them the courtesy call that it had happened. So it's really important that you're aware of that.
That's happened to one of my clients as well. It's just a breakdown of communication, and it wasn't actually the lender he was using was out of state, and I'm not a big fan of out of state lenders. I'm sure, Tommy, you're probably not either because of the loopholes, and the difficulty sometimes of tying up questions and loose ends before closing. But in that instance, he was not informed that there'd be another charge to his card, and that was indeed for a reinspection once the deficiencies in the FHA loan, which were found by the appraiser, were corrected.
Well, there you go. So that's happened to both of us now. And it's not always, it's nothing that's malice. It's just you sign so much paperwork. It's so hard for you to stay on top of everything. And we have to work together with our loan officers to put this whole thing together for you. And so it's just a communication. So just always assume if it's FHA, you've got a very good chance of having that reinspection fee. All right.
And a VA loan as well, I might add, too.
Yes, absolutely. And so then the next thing is the earnest money. This is actually part of your down payment. It is something of value with your purchase agreement. It goes into a broker's trust account, and then at closing, it's a credit to you. So if you have to bring 3.5% down of your purchase price at close, it's the 3.5% minus the earnest money, whether it be $1,000 or $1,500. And it works that way in Pennsylvania as well, doesn't it?
It absolutely does. It's typically about 1% of the transaction. Again, like in most things in real estate, it's negotiable. Sometimes the seller can request 2, but it's typically 1%.
Yeah, and speaking of that too, if you're dealing with a foreclosure, the bank puts a lot more weight on that earnest money check because the bigger the earnest money check, the better the buyer you look like to them. With a traditional sale, at least for me, I don't know about you, Eric, I haven't noticed that many sellers that concerned with the amount. 1% usually is more than enough, but you can also, if it's a smaller home and you're buying something for $150,000 or $200,000, you might be able to do $1,000 earnest money. So again, it's a negotiation. All right.
Absolutely.
The next thing after that would be an inspection. And we're going to talk in the future about all of these things in detail, but specifically inspections. This is one of your last options or opportunities to back out of a purchase agreement should there be something that's not right with the home. And we won't go into that today, but what I'm seeing in the Minneapolis-St. Paul area is inspections are running between $400 and $500, again, it depends on how big the property is. And duplexes, that's a whole nother deal. So we're just talking about regular residential properties today. What are you seeing out there?
Roughly about the same price, and it does go by on square footage, generally speaking. And also it depends if one inspector may include the other ancillary inspections, such as a radon test here in Pennsylvania is pretty big,
Yep.
and also a pest inspection. So if you wrap all those into one inspector, which is kind of recommended in my thoughts, it can be as high as 550 or 600 for all three.
And that's a really good point to bring up because, with radon becoming more prevalent and we've passed laws in the state of Minnesota regarding that there's a disclosure with the house that if you choose to have that radon test done, it could be an extra $150 to $175. So
Correct.
great point. So you figure you're in for anywhere between $400 to $600 depending on your situation.
Absolutely.
Now, that is not a prepaid, that is not a closing cost. That's hard dollars out of your pocket that have nothing to do with the closing costs.
Correct.
The next thing that we would talk about with the out-of-pocket expenses would be home insurance. Now, in the state of Minnesota, you have to, as a buyer, unless you're buying a townhome or condominium that has an association, you will have to purchase a year's worth of homeowners insurance and bring proof of that to closing. The reason being is that year's worth of home insurance covers you from the day you close for 12 months. So when you make your first payment a month later, 1/12 of that payment goes to next year's insurance. It's the same thing with taxes as well. So what ends up happening is every 6 months the lender or the bank that holds your note will pay your property taxes and they'll pay your insurance. So they're kind of putting everything in escrow and taking care of that for you. So it's like building up something for you to have extra dollars. So in case it rises or lowers, you've got more than enough to cover it. But now, Eric, you had mentioned to me before we started taping that there's something extra with the property taxes in the state of Pennsylvania.
With Pennsylvania, it's even a little bit more. What I mean by that is we do also require the 12 months prepaid. It's actually 13 months, but
Okay.
it's essentially a year's of prepaid home insurance as well. But in Pennsylvania, you'll also as part of your quote unquote closing costs, you also prepay for a full year of property taxes. And that's why Tommy and I were discussing before we went on today is why my client's total closing cost bill is probably almost double what Tommy would have for his buyers in Minneapolis. Just something unique to the different two states.
Yes,
But
and every state does it different. So that's another thing
yes,
as a home buyer you want to get informed about. Because like in Minnesota, we have prorated to the day of closing. So
right,
if
right.
the seller has paid taxes for the first 6 months of the year and you close in April, then you will have to pay them 2 months basically back as a buyer. And all of this stuff, for the most part, with the exception of the inspection and the insurance and maybe the appraisal, can get rolled into the closing costs. But those are
Right.
hard out-of-pocket dollars you're going to have to come up with.
That
So
is
the
correct.
other thing to consider is that there's two pieces to your closing costs. There is your cost of your down payment. Then there's
Hmm.
also the closing costs and prepaids. So the
Hmm.
closing costs are made up of a lot of different things, from the lender's 1% or 1.5%, whatever they charge you for their fee, plus the closer to do all the paperwork, a property search, sometimes a well certification. There's all these different things that go into it. Then on top of that, they create these escrows for you, like Eric was saying, for prepaid. So
Right.
unfortunately in Pennsylvania, that's a
Mhm.
whole nother chunk of money that you're going to have to come up with.
Oh,
So
well. I was just going to say, we also have what you have, Tommy. We have that prorated scenario at closing, depending on what time of the year you close. So not
Okay.
only do we have that proration to be straightened out at closing, they also ask for that year of prepaid full taxes. So our closing costs as a whole here in PA sounds substantially greater than
Yeah.
in Minneapolis.
It certainly does. So, for any of you that are listening that are not in Minneapolis and St. Paul or in the Pittsburgh or Pennsylvania, you're going to want to check to see what is required of you. And we say this
Absolutely.
on every single one that we do.
Yep.
If you guys are listening here today or watching us and you do not have a real estate agent, I don't care if you're in Hawaii or Georgia,
Right.
wherever, we can help find an agent for you at no cost to you. You just need to
Absolutely.
reach out to us.
Absolutely. Absolutely.
If and we're here to help too. We're looking for business and we are happy to answer questions as well. So please, all of our information here is on the video. We have it on our websites. If you have any questions or you want to know information, you can call us, you can email us. Both of us are very easy to get a hold of.
Indeed.
Do you have anything else you want to wrap into this?
No, just what I like to always stress to my clients in Pennsylvania here, part of our diligence that we are required to do, Tommy, is that we provide an estimated buyer's cost sheet at the time that one of our clients puts an offer in or our listers receive an offer. It's estimated. Then
Yes.
we direct them back to their lender as soon as they pick a mortgage company to really get a more accurate estimated cost sheet in an effort so that there's full disclosure and there are no surprises as we move toward closing.
And that's a great point because that's another reason why you want to hire a real estate agent and a mortgage person before you write the offer. Because at least here in Minnesota, I typically don't do a buyer's sheet for people. I literally send them right to their loan officer who will
Right.
give them a very accurate
Right.
view of what they think it's going to cost. And that also helps you kind of know where you stand as far as what type of home you want to buy, how much you want to spend.
Absolutely.
Um,
And we're going to talk in future weeks about the elements of these closing costs. And then
yes.
we're also going to discuss the importance of getting the right, matter of fact, maybe next week, I'm not really sure yet, but we're going to talk about the essence of finding the right team, the right combination of realtor and hopefully a local and very solid and reputable mortgage agent.
Absolutely.
So the synergy between the client, the realtor, and the mortgage company, even more importantly than the closing company, the synergy of those three are very, very important, as at least I found in my practice.
Absolutely, and I agree with you. And that's another great point is that you need a team of people to help you get this done. So if you're one of the younger buyers, millennials, you guys are very tech savvy. You can get online, you can look at houses. But what you need Eric and myself for, and a loan officer, as well as a title company, is to get you from beginning to end, because that's the
Absolutely.
piece you don't know that you can't just learn on your own. So
That's
yeah,
correct.
next week we will be talking about how to choose a realtor and how to choose a loan officer, and also talk a little bit about title. So please stay with us. We'll be back to you next week. We
That's
try to always list this on Tuesdays. Again, first time home buyers podcast. You can find us online. You can find us on Spreaker. You can find us on YouTube.
everywhere.
So everywhere, everywhere you want to be, we will be there. So thanks again for tuning in, and we'll see you next week.
See you next week. Thanks again.